Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rumble, ticker symbol RUM. And so it's been a pretty exciting week. Some things happened that I did think would happen, but not to the extent that they did. And, it's looking pretty strong, closing the day almost at $8 a share, closing on Thursday, February 8th at a price of $97 cents, being up 1 penny in the after hours, hitting a high on the day of $8.36. And so, yeah, I just wanted to give an update on my thoughts on this because I think you guys are going to like what I have to say about it, but also, do want to express some caution with this because it has gone up a lot since the lows of $3.33 on January 12th. Being up nearly at $8 a share, there is some risk up here, but I do think there is a lot of potential with price potentially going to $10, which does seem pretty feasible to me. And so I just wanted to follow up on the levels that I went over in last week's video, see how they served to guide in the price action over the past week, and how they can serve as guides moving forward. And so from last week, I put the video out on February 1st when we see this spinning top red candle. And I had suggested in that video that I thought that there would be a reversal. I also pointed out this level, the 236 at a price of $6.59. I did suggest that I thought price could dip lower, and we did not see that. But that level still was a good dip buying opportunity since we did see this run up following that. And one thing I did point out in last week's video was what looked like bearish divergence. We saw higher highs forming in the price, whereas we saw lower highs forming in the RSI. But that has since been invalidated, or at least, following that little retracement that we got, that was the pullback that this bearish sign was suggesting would happen. And now we are seeing higher highs in the RSI corresponding with higher highs in the price. So that divergence is, no longer present. And I do want to point out that on that day, since it was based on a lower high in the RSI and we didn't see a clear pullback, the high was not necessarily established. We are now starting to see a high because yesterday on February 7th, the RSI was at 73.45. Now it has pulled back to 72.12. So that is a higher high corresponding with a higher high in the price. So there's no divergence there. They are similar. And so, I do think that there is a lot of risk, especially with these gaps to the downside right around $5 and $3.64 a share. It's quite possible those could be filled, but there's also a possibility that that may never happen. It's like waiting for Bitcoin to hit 12K. That's probably never going to happen, and it didn't happen. So you've got to ask yourself, what's your, risk tolerance? What's your threshold? And, do you want to risk it being left behind? And so I have been on the side of wanting to see or expecting to see a pullback. And I've been wrong in the sense that it hasn't pulled back as much as I thought it would. But we did see a little bit of a pullback. And so if the top is in right here at $8.36, what levels might it pull back to? That could be dip buying opportunities before, moving up to $10 a share. Or, is this not the top and it's just going to continue? There will not be a pullback. So how do we navigate that? And so my thoughts with it are that maybe this is not going to pull back. Maybe $8 is a great opportunity to establish a position in this. If it does go up to $10, which does seem likely as far as what I've heard from the community, with the company needing it to go up to $10 a share and hold above $10 a share for more than 20 days, presumably trading days, so approximately a month, so they can raise some capital. And with that raise of capital, stock price would probably dip down. So there's a risk there. But if price does go up to $10 and holds above there, that could be a great opportunity for a swing trade. And that would be a swing trade of approximately 25% from the current price. And so that seems like a pretty good thing to, take advantage of. But if there is a pullback, how could you take advantage of those dips before continuation higher? And this is one thing that I'm not that great at, trying to get better at, is establishing a full position and inching my way into that. And so let's say I want to have 100 shares, just using that number, generic number. I would want to inch into that by establishing a quarter of a position, buying 25 shares, and then waiting to see if it dips more. If it does dip, then add another 25, building up to that 100 share position that I want. And so at $8 a share, I could establish a quarter of a position here. If it continues to $10, that's a 25% gain. That's great. And I do think price will reside above $10 for, a month. So I do think that could be a great trading opportunity. But if there is a pullback, I want to be able to add to that position so I can build up to that full position. And so levels that do stand out, I had thought $7.02. I thought that we'd be pulling back from that, but now it seems like that could be a dip buying opportunity. There's quite the possibility it doesn't return to that level. And so we can use this Fibonacci retracement to guide us in levels that it could return to. Just like from this top here, closing below the yellow line, we did return to the 236 before rallying higher. And so if I do adjust this retracement to the current high of $8.36, we can see that the 236 is now at $7.17. And that is pretty similar to the yellow line at $7.02. So, I do think that could be, a level to maybe add another quarter of position and see how that goes, evaluate it, managing risk, because it could quite possibly move to this next level, the 382 at a price of $6.44. And I personally would want to take advantage of that. If it was to go to $10, that would seem like a good dip buying opportunity. And it does seem like $5 might be off the table for now. I don't think it's going to be filling that gap anytime soon, and suspect it will be getting to $10 first. So that is something to think about, that if one is to establish a position, establish a small position now, because maybe it doesn't pull back. Maybe it just rockets up to $10 a share, and then you're not left waiting and then FOMOing in at the top. But you also don't want to establish that full position now, because then that could be FOMOing at the top. If it does pull back, you or one, does want to be able to add on dips. You want to buy dips and sell rips, or you can hold rips if that's your style. If you want to diamond hand it, it's up to you. But for me, I see this as a pretty nice 25% swing trading opportunity, and I'm intrigued by that. And if it does dip, I will add. And if it doesn't dip, I'm going to be happy with a 25% swing. And also, just to kind of extend this Fibonacci up to $10, if we do see a top there, what are some levels that might stand out as, pullback levels? And so one of those levels would be $8.42, so right around the high of today. So the high of today could be a pullback dip buying opportunity at the 236 at $8.42, just like we saw that pullback here to the 236, which is now, coincidentally, the 50% retracement at a price of $6.66 from a top, if it does top, at $10 a share. And then we can also see that the 382 is at $7.45, a little bit higher than the yellow line at $7.02. But, those are just my thoughts on the journey to 10. Hopefully you found them helpful. If you did, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.